Hello, everyone. My name is Bradley Triana, and I am the Senior Tax and Accounting Advisor here at NPK. And today we're going to be talking about the no tax on Social Security deduction, this new deduction that is going to be part of the One Big Beautiful Bill. And how does that affect you? Do you qualify? We're hoping to answer all of those questions today. Let's dig in. So a quick legal disclaimer. All the information presented here is intended for the addressees only. Any use of this information for anyone other than the addressee is strictly prohibited unless approved by NPK, and all information provided here is for discussion purposes only. Actual situations may vary. NPK and CPAs makes every attempt to provide accurate and concise information in this presentation. However, some information may change over time depending on each client's situation. NPK does not provide any legal services or legal advice to clients. Information and processes presented here are copywritten by NPK. So with that being said, let's go. So this is a question I get asked, what do you mean my Social Security benefits are being taxed? How does that work? Why am I paying on my Social Security benefits? Well, it's always been that way for a while now. So you have different percentage brackets. You have 0%, 50%, or 85%. This is all depending on your income and your provisional income, which we go through that whole process when preparing tax return, and it could be anywhere from within those percentage brackets. However, this new deduction is looking to resolve a lot of that big complaint. So, what is this no tax on a Social Security deduction, and how does it work? So it's going to be effective for the tax years 2025 through 2028. It's going to be $6,000 per individual over the age of 65. So even if you are not at that full retirement age of 67, if you are 65, you still get to qualify for this deduction. And the phase out starts at $75,000 single or $150,000 if you are married filing jointly. So very generous. So what does that mean for you as the taxpayer? How does this affect you? Well, prior to OBBA, there actually was already a deduction provided from the tax cuts back in 2017. It was going to be an additional standard deduction for seniors, and it was going to be $1,600 per qualifying individual on a married filing joint return, so a maximum of $3,200. So for single, it was $2,000. So this was the first kind of attempt to alleviate some of the taxable benefits issue. The issue was it was not available to itemizers. So if you had a lot of mortgage interest, property taxes, all of that we would go down the itemized route, you didn't qualify, and it led to a lot of frustration. With this new deduction, it's going to be $6,000 per qualifying individual. And it doesn't matter the filing status outside of, so the only one that doesn't qualify is going to be married filing separate. They cannot claim the $6,000 deduction for Social Security. The phase out is 6%, and it starts at $75,000 for singles, $150,000 for married filing joint. Complete phase out is at $175,000, single, and $250,000 for married filing joint. So who benefits from this? You're going to see a lot of middle income retirees that will benefit from this. Those that fall within that bracket. And then also those who are in the high net worth individuals, they face more exposure to taxation. However, as long as they're under that $250,000 married filing joint or $175,000 single, they will still benefit. Since you won't be completely phased out. Those who are already at that 0% taxable benefits, there's really no change there. You're not getting taxed at all. So those who will really benefit are going to be those middle of the road, middle income to upper middle income income earners. So here at NPK, we really want to empower our clients to make informed, confident financial decisions, equipping them to shape their financial future in a very purposeful way. If you have any questions about this deduction and how it affects you and your tax situation, I'd encourage you to get together with your tax advisor and talk with them, maybe do some planning for year end. to see how this is going to affect your 2025 income. I appreciate you watching, and I can't wait to see you all in tax season.